Hey, I'm Andrew Adams, mortgage educator and loan advisor, and today we're unpacking one of those questions that seems obvious until you actually try to explain it. What is a mortgage? Now, if you're already thinking, I kind of know, pause that thought because really understanding what a mortgage is, how it works, and what it means for you, that can help you sidestep costly mistakes and maybe even save a lot of money. Let's break it down in a way that's practical, clear, and I promise no sales pitch here. So, starting at square one, a mortgage is a loan. More specifically, it's a loan used to buy real estate. Now, if you don't have a few hundred thousand lying around, and let's be honest, most of us don't, this is how you finance your way into a home. But here's what makes it different. The loan is tied to the property itself. The lender holds a legal claim called a lien on the home until it's paid off. Fun fact, the word mortgage actually comes from Old French, mort meaning death and gage meaning pledge. So when you think about it as a death pledge, it's kind of a serious commitment. But in simple terms, a mortgage is just this. I'm borrowing money to buy a home and I'm agreeing to pay it back over time. That's it. Now, there are three main players in the mortgage equation: you, the borrower; the lender, which is usually a bank, credit union, or mortgage company; the property, your future home, which serves as the collateral. Now, the lender fronts most of the money. You pay it back monthly in chunks that include principal and interest. We'll break those down next. Now, your monthly payment isn't just rent to the bank. It's made up of four main parts, often called PITI. Principal, the part that chips away at your loan balance. Interest, that's the cost of borrowing the money. Taxes, local property taxes usually are bundled into your payment, and then insurance, which will include homeowners insurance and sometimes mortgage insurance. All of this gets rolled into one payment. It's designed to protect everyone involved: you, the lender, and the property itself. Now, most mortgages are set for 30 years. Some are shorter, 15 or 20 years if you want to pay it off faster. Some are longer, 40-year terms are gaining acceptance. But here's something not everyone tells you. At the start, most of your payment goes to interest, not towards owning the home. It's how amortization works. So, yeah, those early years might feel like slow progress, but as time goes on, you'll pay more towards principal, and that's when you start building equity. Now, equity is just a fancy word for how much of the home you actually own. Now, there's more than one flavor of a mortgage. A few of the most common: fixed rate, same interest rate for the life of the loan; adjustable rate, starts lower but may rise over time; FHA, government backed, designed for lower down payment options; VA, for veterans and active service members, often with no down payment; and then conventional, not government backed, but great for borrowers with strong credit. Now, each one has pros and cons depending on your income, credit score, goals, even how long you plan to stay in the home. Now, understanding how a mortgage works can really help you. Ask sharper questions when you're shopping for a loan. Avoid sketchy offers or misleading ads. Get a clearer picture of what you realistically can afford. And maybe, just as important, it helps lower the stress. Home buying is a big step. It should feel exciting, not terrifying. Knowing the basics, that's where confidence starts. All right. Now you've got a solid grasp on what a mortgage really is and why it matters. So here's what you can do next. Drop a comment if it helped clear things up for you. Have a question? Leave it below. I might feature it in a future video. And like, subscribe, and share this with someone who's thinking about buying their first place. I'm Andrew Adams. My goal: to help mortgages make sense. So when you're ready, you feel ready. Thanks for watching, and I'll see you in the next one.